Start these off by asking why a SPAC? Why not just go traditional IPO route?
SPACs are awesome from the timing point of view. They allow you to move things along pretty quickly. They're also great for companies like us in terms of how much capital you can raise. You can raise probably 2 to 3 times more capital in a SPAC transaction than a regular IPO. And then in this market condition, kind of timing was really critical, and it allows you to time things really, really well.
Why was timing critical?
Because after the lockdowns, the private markets obviously were in a lot of trouble and had a hard time funding companies. As we saw, some of the best companies out there had trouble raising private capital, but the public markets were performing really well. And from that point of view, getting out there quickly was an important factor. Obviously, this is a capital-intensive business, but if you build it right, you create a great operation, as we've seen with Carvana and CarMax. And the technology leverage here is huge as well. So for us, getting out into the markets quickly was really important, and the SPAC allowed us to do that.
Yeah. Well, timing is also seemingly in your favor, at least when it comes to the used car market, which may never have been hotter. How is that going to impact your business or ability to do business?
Yeah. This year has been pretty unusual. Who would have thought that we'd have 60 to 90 days of lockdowns? And then from coming out of those, you'd have incredible demand for cars and prices would be at record highs. It's been a really unusual summer. I think everyone's talked about how gross profit for dealerships have been very high in the summer, and demand for vehicles has been really strong. We've had an awesome kind of opportunity to service a lot of customers. Growth has been really fantastic. And frankly, our acquisition channel, meaning us buying cars from consumers, has been going really, really well. And demand on purchasing cars has been also really strong. So lots of people coming to Shift.com to buy cars. I think we're now getting back to normal. Usually the fall in the used car market tends to be very seasonal and prices go down. And that's definitely starting to happen. I think a lot of people were kind of a little bit exuberant in terms of what the expectations would be and thought this would last forever, but it's actually not going to.
But George, finally, it seems to be a fairly competitive market. I mean, many people know CarMax, they know Carvana, they know these names. I mean, I've never heard of Shift Technologies. What do you do better than they do, and how much are you going to spend on marketing just to get your name out there?
Totally. So Shift has 2 things that our peers don't do. Number one, we sell a much broader set of inventory. So if you want to buy an older vehicle, like something 6 to 10 to 12 years old, we're probably one of the few places you can actually do that in a fun way. And we're definitely the only digital place you can do that. And secondly, we bring the test drive to your home. So you can come to our website, find the car, book a test drive, and then it shows up at your house, which is one of the ways why people love Shift. It is a competitive market for sure, but for Carvana, Vroom, and Shift, all 3 of us, we're less than 1% of the market in terms of total sales. E-commerce adoption is tiny in used cars or automotive in general. And so there's a huge opportunity for all 3 of us to grow. Literally, Shift could grow 40x, Carvana could grow 10x, and we'd still be a tiny portion of the market.
All right. Well, we'll be watching. Congrats on getting public.
Shepard Smith here. Thanks for watching CNBC on YouTube.